What should you do if you are the head of a public firm that is not a part of the financial world, but has the most exposure to Bitcoin, and you have just witnessed approximately $5 billion of your revenues disappear? If you're Michael Saylor of the US software business MicroStrategy, you sit tight and keep your crypto in your wallet. At the very least, Michael Saylor is doing it this way. So why did Michael Saylor risk company cash on Bitcoin? And he wants other corporations to join him to bet company cash on Bitcoin. Hi there and welcome to Ethereum Altcoin News. Make sure to hit the like and subscribe button, also to watch till the end. Make sure you watch the entire video to the end, because that's when we will break down his strategies for Saylor and explain the one and only situation in which he would be forced to sell. This week, Saylor insisted that his faith had not been affected in a series of media appearances. Any time horizon shorter than 4 years is likely to result in a great deal of frustration and uncertainty, he said in response to questions sent to him through email. He cited Warren Buffett and John Bogle as examples of successful investors who understand that short-term market fluctuations are nothing to be concerned about. Michael Saylor is an American entrepreneur and business executive. He is a co-founder of MicroStrategy, a firm that has made significant investments in Bitcoin, and he now serves as a company's director. Saylor has been an outspoken supporter of Bitcoin, and his advocacy has helped MicroStrategy become one of the most largest public investors of crypto. The company increased its total number of Bitcoin holdings to $6 billion at the beginning of this year, after borrowing more than $200 million from a crypto lending bank to purchase additional tokens to add to its pile. MicroStrategy's stock price has decreased by roughly 70% since the beginning of this year, and by nearly 16% in the most recent month as a direct result of the company's mounting losses associated with Bitcoin. Despite Bitcoin trading at its lowest level in over a year and a half, that his company's biggest cryptocurrency investment is in the red, Michael Saylor does not believe that his trust in the most popular cryptocurrency in the world has diminished. If the software entrepreneur, who is 57 years old, has managed to show a surprising calm throughout the slump that has been seen Bitcoin lose about 70% of its value since its all-time high in November of last year, then it could have something to do with his personal history with market meltdowns that are even more dramatic than the one that has hit the cryptocurrency markets. In the early 2000s, MicroStrategy became a symbol of the most recent major boom and collapse in the technology industry. Saylor promoted a vision of how the expansion of the data analytics firm would be supercharged by the internet, which led to a surge in the stock market value of the company. However, it got erased by more than 99% when the market crashed. Saylor, who refuses to comment on the crash, saw more than $6 billion wiped out of his wealth in a single day in March 2000, when the business adjusted its accounting and restated 2 years of sale. A later investigation by the Securities and Exchange Commission led to a settlement in which he paid a fine and disgorged $8.3 million in profits, but he neither admitted nor denied wrongdoing as part of the agreement. People who have followed Saylor over the years describe his rock-solid self-assurance as one of his defining characteristics. Saylor's apparent zen-like indifference in the face of the Bitcoin wipeout also remarks to rock-solid self-assurance. Nobody has ever lost money investing in Bitcoin for 4 years. That was Michael Saylor talking about the recent dip in Bitcoin prices in an interview, and he compared the recent crypto crash with the early days of the oil and car industries. Saylor made an effort to ease people's anxieties about falling crypto prices by stating that any time horizon of 4 years in Bitcoin's history has resulted in favorable returns for investors. But the price of Bitcoin has dropped by more than 70%, resulting in paper losses of more than $1 billion for MicroStrategy, which owns around 129,000 Bitcoins. Well, it's difficult to predict how the current swing will play out, but it's important to keep the big picture in mind. If you believe these are valuable assets and that their use will become more common in the future, you should see it as a seasonal wing. If the value of our assets has shifted, you may need to reconsider your portfolio strategy. Experts typically recommend that cryptocurrency remain a small part of your overall portfolio, between 1% and 5%, and that you only invest as much money as you are comfortable losing. However, for those looking to get into cryptocurrency, Now isn't the best time. CNBC recently spoke with Ivory Johnson, a certified financial planner and the founder of Delancey Wealth Management. He made one exception for investors with extremely long time horizons or dollar cost averaging into the asset. Those who invest now must have long-term conviction. Luther sees the current crypto swings as a reminder to his students to be cautious of owning too much crypto. But it is the complete opposite for Saylor. He believes that you should invest more in cryptocurrency. So if you're going to follow him, then you should take a breather and consider whether the cryptocurrency you wish to invest in can help you in the long run. You should think about how you want to act. Are the dangerous opportunities disguised as risks? If you see it that way, you may want to keep your position or take advantage of a price drop to invest more. Are the risks likely to remain or worsen? If this is the case, you should cut your losses and exit the game for the time being. Is the situation very complicated? If you can't see the future, try dividing the difference and selling some of your stakes today while still having possible upside tomorrow. Whatever path you take, you'll need an action plan that represents your perspective on the possible risks and possibilities presented by cryptocurrencies. However, it is worth mentioning that some of the world's brightest investors will not touch cryptocurrencies and would strongly advise you against doing so as well. Also, Michael Saylor insists that the more than 19,000 cryptocurrencies and digital tokens that are currently in circulation must be considered unregistered securities and cannot be compared to a tangible commodity like Bitcoin, which does not have an issuer, no management, no employees, no product cycle, and only a finite supply. Saylor explained that Bitcoin was becoming caught in the crossfire of a falling cryptocurrency market because it was often used as a collateral for margin loans for lesser proven tokens. He argued that even rock-solid multinational corporations like Apple would experience more volatility in their share price if there were no regulations in place to prevent practices like wash trading. Wash trading is a method of artificially inflating prices by trading between two wallets that are both owned by the same party. He used examples like Three Arrows Capital, often known as 3AC, to argue that Bitcoin hedge funds are more of a barrier than a facilitator to widespread cryptocurrency adoption. The collapse of the Terra USD stablecoin has put 3AC in danger of a total collapse. Well, due to the high degree of volatility and speculative nature of cryptocurrencies, you might experience feelings of unease whenever market prices drop. Put it to good use by using it as a wake-up call to reconsider the reasons you got engaged in the market in the first place. In what ways may it be used? And what are the potential downsides? Even though Bitcoin, for example, has made significant gains after experiencing significant losses in the past, there is no assurance that it will do so in the future. This is especially true if it is facing serious existential questions as a result of countries banning the use of it and possibly even the ability to own it. And this is the type of genuine risk that may either kill an investment or benefit from it, depending on whether or not the actual occurrence is less severe than what was anticipated. You're surely aware of El Salvador's president, Nayib Bukele, who was the first to establish Bitcoin legal currency in his nation. He's now backtracking his own month-old statement advising investors to buy the dip. Instead of watching the value of their investment drop, he simply told his supporters to enjoy life on his official Twitter handle. I see that some people are worried or anxious about the Bitcoin market price. My advice? Stop looking at the graph and enjoy life. If you invested in Bitcoin, your investment is safe and its value will immensely grow after a bear market. Patience is the key. I guess that could be the key to pass this recession.